Hey everyone, Steve here from theturtlefollower.com. In this video, we're going to take a look at a trade that we made in the model portfolio in Kimco Realty, symbol KIM. So, just as we would for any trade or anything like that, we were looking for a consolidation and then a breakout from that consolidation. This happened to consolidate, move right to the 50-day moving average. And that's what really stemmed the breakout. So you could see it pulled back to the 50-day, then all of a sudden broke out. We entered, this was our trigger bar here on the 7th. We entered the trade the next day on the 8th. Now, as the trade went on, the one thing that happened, and I was telling members, was, you know, it's very nice to have a trade that just goes your direction right away. But when it doesn't really give you any type of pause or any retest of a breakout level, it's very difficult to trail your stop up, and that's exactly the issue that we had with Kimco. You could see it just continued to go and continued to go. All right, and then finally it slowly started to reverse. But now the fact was, when we entered this trade, our stop was right here. Okay, right here, 24.85. We then trailed stop up to 25.08. But at no point was I actually able to trail my stop up. I think the closest thing we had was here at 26.40. Right, but at this point, if I trail my stop up, my 50-day and my trend line are still below that level, and that's one of the key components that we use when we trail stops in the model portfolio. So you could see that now Kimco is starting to reverse, and then finally we started to get to the point where we could use this 26.43. All right, because now the trend line is there, the 50-day moving average is there. All right, so we finally moved up to 26.43, and no sooner did we move our stop up did we actually come down to that level, come down to the 50-day, and then we started consolidating around the 50-day moving average. All right, so again, this would have been a perfect area to move that stop up to should Kimco actually go ahead and break out of this small consolidation. But we were using these lows from back here because that was really all I had at the point at that time. So ultimately what happened was Kimco stopped us out. So a good looking trade. All right, it's set up very well for us. It ran. Looking back, this was one of the adjustments I've made in my personal trading, as well as the model portfolio. Is, you know, I start to now classify trades as momentum trades or longer term trades. And, you know, looking back, Kimco was probably a good candidate for a momentum based trade, where we would then go ahead and look at the trade using the 21-day and the 8-day exponential moving averages. And once we got to the point where we saw a breakdown below the 21-day moving average, we probably would have used that to get out of the trade. It wouldn't have saved us much because we do go on closing prices. But ultimately, you could see what happened with Kimco. We were stopped out back here on the 19th. It had a nice 2-day reversal, came right to this downtrend line, and then reversed again. So ultimately, we took a small loss out of the trade. It could have been much worse if we didn't follow our plan. So that's one of the important things with trading, is make sure you're always following your plan. Even if you think other things are going to happen, it's very important to be trailing stops up and take the exit when you can. So that's it for this video. I hope you guys enjoyed it. Any questions or comments, please leave them below. And premium members, head on over to tonight's strategy session, where we're going to go over a trade that we made in BMY, and it acted very well for us today. So let's get over and check that out.